All right, we're here in beautiful Kelowna, BC at the GTEC headquarters, sitting down with Norton Singhavon, CEO. Norton, thanks for having us.
Thanks for having me.
So I just want to get this conversation started, picking up where we left off in April 2019 at the Benzinga Capital Conference. You said 2019 was going to be a year of execution for GTEC. How would you say that's going? What kind of grade would you guys give yourselves?
I would give ourselves a B+. And that's because we've had some delays with some Health Canada licensing. Grey Goose and Tumbleweed didn't commence cultivation when we projected. Also, Q2, our financials were not strong. But I think moving forward, Q3 has been much stronger, as you could see.
Absolutely.
We lowered our cash burn by 1.1 million or 40%. We eliminated third-party consultants from 500,000 to zero this quarter, with reductions all across the board.
That's perfect. And obviously, dropping operating expenses, driving revenues, sales, increasing production. If you can achieve both those things, I mean, that's the definition of scale. So obviously investors will be happy to see that. For those who aren't super familiar with the GTEC story, I believe it's 5 separate facilities, 3 are up and running, and 2 are coming. Could you just give a quick overview of those?
Yeah, so we have one facility, Alberta Craft Cannabis, that's fully operational. We have our cultivation, standard processing license, and medical sales license there.
Yeah.
Then we got Grey Goose and Tumbleweed license this summer.
Yeah.
They are in ramp-up mode right now. Those should hit full production within the next few weeks. We also brought in 30 new strains into Grey Goose and Tumbleweed, and about 25 of them don't exist in the LP world yet. So we're very excited about that. High THC content.
That's where the consumer.
We believe that at bare minimum, we'll still maintain our current gross margin, but with the hope that we'll increase that. And then we have Green Tech Biopharma, which and F20 that we should have finished construction within the first half of next year, and plants in the door still hopefully within the first half of next year.
Perfect. That's exciting times. So let's just jump right into the financial statements. Revenues, impressive growth quarter over quarter. It was what, 8x from before?
9.5, I think, roughly.
Wow.
Yeah.
That's pretty good. So breaking $1 million in revenue, gross margins you maintained, which, I mean, again, that's kind of the definition of scale, and you already said the operating expenses were dropped. Looking forward, how do you see revenues or sales trending?
So Q3 we did $1 million. Q4 I'm confident we'll do north of $2 million. And then Q1 of next year, we expect actually to be EBITDA positive.
Oh, excellent. So guiding to profitability now too. That's perfect. And so looking at the cash balance, obviously that's been a question that's been raised before, about $500K on the balance sheet right now. Looking forward, you obviously sold Cannabis Cowboy. Could you just help investors understand what the cash balance liquidity situation could look like over the next few quarters, levers that you can pull or have pulled?
Yep, so Cannabis Cowboy paid back our shareholders' loan of $4 million. We also got back our $250,000 deposit from the Canopy facility. We've also been selling almost all of our inventory. And with that said, we've also sold our 25% stake in Cannabis Cowboy. So as it stands, we should be at about a $5 million cash balance, with also $1 million from the sale of our 25% stake in Cannabis Cowboy. The $1 million will be $800,000 in Fire and Flower shares and $200,000 in a prom note. So with that said, currently sitting at about $5 million. We also are exploring other opportunities, if needed, to divest of certain non-operational assets, which really is other retail locations.
Right.
We went into this, with the intention that we want to dabble in retail. We still want to play in retail, but cultivation is more important to us.
Sure.
So if that means, sacrificing some of the retail to complete our cultivation story, I'm okay with that.
Absolutely, and it's better to focus on one thing, do it exceptionally well, than try your hand at 10 other things and kind of do them half-assed, like some of maybe the bigger LPs that we're seeing kind of struggling to manage super broad operations. And so looking forward, yeah, obviously you're going to stick with the wholesale, but you're going to start selling to provincial retailers. That should help sort of the gross margins a little bit, higher selling price. Also within the last, since we last chatted, you replaced the CFO, or CFO's moving over. Could you help talk investors through that, the decision, the reasons behind that?
Yeah, so our CFO is based in Vancouver, and we're a Kelowna-based company, as you can see here. What we needed was somebody that's more operational, that's based in Kelowna, that's here in the office full time. Our previous CFO was great for ramp-up, startup, raise capital, but now we become more of a mundane operational story with strong internal controls, budgeting, forecast, cash management.
Yeah.
So with that said, we brought on actually a consultant. He's formerly from Vancouver, now lives in Kelowna. He's been involved in a lot of mining operations,
Okay.
and he's our financial consultant with the intention that he will be a CFO for the company in the future. And in the interim, our previous corporate controller, Kendra, is now interim CFO.
Excellent.
So he's kind of mentoring her, and we've noticed just in a very short time frame, we've been able to bring in much stronger controls.
That's excellent. And I mean, everyone has their niche too. Like, you can't expect someone who's more of an entrepreneur, more of a startup, to be the same type of person who's going to be the operator as well. A couple last points to touch on. Obviously, there's the debt coming in 2020. You're guiding to profitability in Q1. So do you see any issues on there? How are you guys thinking about the debt that's due?
No, so we've actually stress tested the MMCap debt internally. If we're only growing 75% of our capacity, getting $4.50 a gram for flour, $2 a gram for trim, we're still able to fulfill our
Debt obligations.
our debt obligations, our capex for the other two facilities. It'll be tight, but we can do it.
Excellent. And obviously, you guys, just to put it into perspective, you're what, $5.80 right now per gram?
$5.85, correct?
Yeah, so I mean, you guys have lots of room to play. Last little question on the end: what is the biggest catalyst coming up for GTEC in the next few quarters? What do you, if you were to pick one?
I'd say getting to EBITDA positive in Q1 of next year will be big. And then when the other two facilities come online, we go from about 4,000 kg to 10,000 kg. So that's where it starts to get interesting.
That's a big pop right there. That's excellent. Well, Norton, thank you very much for having us. It was great chatting today.
Thanks for having me.